The stock market has been quite turbulent recently. The market has put investors to the test, from pandemic-induced sell-offs to record highs in 2021 and a rough 2022. Investors should evaluate long-term success rather than short-term volatility when searching for the finest stocks. We've produced a list of the finest stocks based on year-to-date performance to assist you. Are these the greatest stocks to invest in right now? Certainly not. But it would be best if you indeed considered them. The professionals are still working on projecting the future of even today's top-performing companies. But the greatest stocks for your portfolio aren't always the best stocks for someone else's. Hello, and welcome to today's video, where we will be looking at the top 10 gaining stocks or funds that you should consider. Before we can start, please remember to subscribe to the channel if you haven't done so already. Turn on the post notification bell to get future video notifications. Having done that, let's get started. Number 10. Alphabet Inc. Alphabet stock has hovered between $2,500 and $3,000 in the last year. The stock looked to have great support, and it had always garnered purchasing activity until now. Alphabet stock is under $2,400, making it too inexpensive to ignore. The stock is currently priced at around 21 times trailing earnings and just 18 times projected earnings. Shares would be considerably cheaper if not for the company's significant cash balance. This is a hefty price tag for the world's most powerful search engine. That's far from Google's sole asset. Its cloud business is booming, and it has other projects in the works, including the Waymo self-driving car division. Given industry circumstances, Google's revenue growth may stall, but there's a large margin of safety at this much lower entry price. Number 9. Meta Platforms Inc. The biggest tech stocks have gone from market darlings to market dumps in record time. Meta Platforms, the parent firm of Facebook, is an excellent illustration. Last October, stocks hit fresh all-time highs, and the future seemed promising. Mark Zuckerberg, the company's founder, revealed its enormous investment in the metaverse and wants to rename it Meta Platforms to reflect this metamorphosis. The metaverse has become a laughingstock only a few months later, and investors have abandoned the enterprise. After all, Meta has issues with its primary business since the digital advertising industry has slowed. On the other hand, Meta continues to rake in huge sums of money. Meta shares are now selling at about 14 times profits and less than 9 times EBITDA, earnings before interest, taxes, depreciation, and amortization. Meanwhile, experts predict that Meta will return to profitability in 2023. Meta shares should be set for a quick comeback if and when this occurs. 8. Intel Corp. Investors increasingly prefer profitable and cash-flowing enterprises over more speculative growth companies. More established IT businesses are becoming more appealing as investor tastes shift. This reintroduces a business like Intel into the conversation. In recent years, Intel stock has lagged behind more agile competitors such as Advanced Micro Devices Inc., AMD. However, the core business remains unrivaled in cash flow generation in the semiconductor industry. In 2021, Intel had a $22 billion profit while spending more than $15 billion on research and development. With shares trading at about 13 times earnings, this is a good price for a firm that is still a market leader. It's also one of the few dividend-paying growth companies with a current yield of 3.1%. 7. Oracle Corp. Oracle, like Intel, benefits from investors' preference for profitability and cash flow above sales growth prospects in the future. By revenue, the corporation is one of the world's biggest software companies. While it isn't the most flashy of electronics stores, it has a sizable following. Users have become used to Oracle's databases and other key products and are typically unwilling to switch. After all, this is what software businesses strive for. Establish a client base, and you'll be able to create a steady stream of cash for years or decades. Oracle, on the other hand, isn't resting on its laurels. While Oracle's cloud computing product isn't on par with Amazon.com Inc. or Alphabet, it has gained traction and has significant growth potential. Following the recent sell-off, shares are now trading at about 15 times projected profits, so any future top-line sales growth should make this an appealing buy. 6. Salesforce Inc. Salesforce is one of the biggest cloud software firms on the planet. It was added to the Dow Jones Industrial Average in 2020, taking the place of ExxonMobil Corp. That turned out to be an incorrect time indication since energy has recently outperformed software. Regardless, Salesforce's inclusion in the Dow demonstrates its steadiness in the face of rapid change. Salesforce has prudently created a platform, adding communications and e-commerce capabilities to its core marketing management business over the last several years. Salesforce has established a vast product portfolio by making big decisions like purchasing workplace messaging network Slack, a vital piece of infrastructure for many Fortune 500 firms. Salesforce's stock has dropped over 45% from its 52-week highs, making it an excellent time to purchase. 5. Avalara Inc. Avalara is more of a niche business than many cloud software stocks that attempt to serve a large market. The firm specializes in e-commerce tax compliance. Avalara has an excellent competitive position in a fast-growing market since there are just a few genuine rivals. In recent years, sales tax compliance has become more critical. Individual states may now impose sales tax on all transactions, regardless of whether an e-commerce merchant has a physical presence in that state, according to a Supreme Court ruling in 2018. Avalara stock has lost more than half of its value after a huge run-up in 2020. Traders are leaving smaller cloud enterprises like Avalara due to declining e-commerce growth and the IT sector. On the other hand, long-term fundamentals remain positive for e-commerce and, by extension, service providers like Avalara are becoming a reason enough for you to invest. Number 4. EOG Resources Inc. EOG Resources, a U.S. oil and natural gas company, is the best performing of U.S. News 10 best stocks to buy for 2022. EOG has outperformed the market, rising 45% year-to-date as energy prices have risen. Crude oil temporarily surpassed $125 a barrel, and inflation has continued to grow, with the Consumer Price Index reaching 40-year highs of 7.9% year-over-year increase in February and 8.5% in March. Even in the fourth quarter of 2021, EOG was humming, with adjusted profits per share, or EPS, up 335% year-over-year. Due to its extraordinary accomplishments, the firm recently issued a special dividend of $1 per share, or 0.9% of its share price at the time. Analysts forecast further records in 2022 after posting record-adjusted profits in 2021. Number 3. Microsoft Corp. The next best stock to buy in 2022 is the big tech giant Microsoft. In recent years, the company behind the Windows operating system and Microsoft Office and Office 365 productivity software has shifted its focus to other areas of growth, most notably through its $26.2 billion acquisition of LinkedIn in 2016 and its increased focus on its cloud computing arm, Azure, which saw revenue rise 46% last quarter. Microsoft made its largest ever acquisition in January, a $69 billion purchase of video game maker Activision Blizzard Inc., ever aware of identifying fresh growth opportunities. If approved, Microsoft would become the world's third largest gaming corporation, positioning the company to compete aggressively in the metaverse, should that notion catch hold. 2. Qualcomm Inc. Investors may have been too enthused about Qualcomm during the outbreak. The wireless communications semiconductor company stock has quadrupled from its March 2020 lows. This may have been a stretch. Qualcomm's success is, after all, inextricably linked to the deployment of new generations of wireless technology. Meanwhile, some 5G expenditure was postponed due to the pandemic. However, 5G deployment has begun in earnest. Qualcomm has begun to diversify its financial resources outside its main wireless business. Its attempts to create an automotive chip ecosystem, in particular, have a lot of potentials. And number 1. Applied Materials Inc. Applied Materials is the industry leader in semiconductor production tooling. This has been a booming business in recent years since innovations like the Internet of Things have drastically boosted the global demand for semiconductors. In current supply chain concerns, semiconductor companies have had an unprecedented windfall in the last 2 years. This has spread to semiconductor equipment manufacturers like Applied Materials. Applied Materials stock is now down as investors predict a substantial reduction in semiconductor demand. In the near term, this is conceivable. However, the cycle may not be as terrible as previously thought. Companies like Intel are now developing huge semiconductor plants in America to diversify their supply chains. This could help Applied Materials maintain its sales pace, and shares are currently trading at less than 14 times forecast profits. That's it. The top 10 gaining stocks and funds that you should give a second ear or consideration. As we have seen, some of these are a venture that will require you to have a little patience and maybe consider them as long-term investments. Which one among these do you think will be the most lucrative investment? Please share your thoughts in the comments section. Don't forget to subscribe to the channel and turn on the post notification. Like if you enjoyed it, and until the next one, stay safe and tuned in.